Welcome guys. So today I'm going to tell you what you don't know about the CPI and at the same time how to trade it. So stick around to the very end. The CPI is a very important economic indicator. It tells us how price increases for consumers. Okay, look at it like a basket that includes foods, it includes transportation, at the same time healthcare. So the CPI tells us how its increase is affiliated to inflation that affects our pocket. CPI is being calculated and using the data from 1982 to 1984. It was actually equated to 100, and since then, now 100 has been used as the base pair in which every other data has been measured against. Now let's look at the numbers. From January 2024 to January 2025, the CPI number increased by 3%. You could also see that from 2023 to 2024 December, price increased by 2.93%. So we can see that it's an indicator that actually influences the increase in healthcare, energy, and commodities like clothes, also food. It also impacts food. At the same time, it impacts transportation. Now we're going to look at the driving forces behind inflation. Okay, so we know transportation to be a major deciding factor in inflation. Because take for example the accounts of 2023 to 2024, the CPI data release gave us a number of 1.26, and this percentage accounted for at least 8.8% of the general data released. So transportation inflation actually affects insurance. It also affects aviation, that's for your air tickets. Now, why does it matter? US CPI is a very important indicator that will definitely help us see why inflation occurs, and at the same time it helps the government in reducing inflations by making either dovish or hawkish decisions. So now we get to see inflation, what US CPI is, how does it US CPI, how it affects inflation, how it affects depreciation, how it can also cause recession. So now we are going to look at how to trade the US. Like and subscribe to support the channel. Please do that right now. So now we are going to discuss about how to trade the US CPI. So don't get me wrong, there are CPIs for Euro US, there are CPIs for Europeans, CPIs for Australians, CPI for New Zealanders, CPI for Nigerians, you understand? But then we look out for the CPI that actually causes a havoc in the market. When I mean havoc, I mean volatility. So now the US CPI stands out in terms of every other country's CPI. So that is why we pay more attention to the US CPI. So right now we look at how we can actually trade the US CPI. Yes, you've been taught different ways how CPI impacts the market. You even sometimes get wiped off, manipulated, taken out. Your stop loss gets hit due to being in the market at the wrong time, or your entry not being placed at the right price. So what I want to make you guys understand is what actually happens, what takes place before the CPI. So now, in my analysis earlier last week, I talked about a very important factor about trading, which is markets doing three things all the time, which is accumulation, manipulation, and distribution. These are like distribution or displacement. These are like the three phases that every time frame goes through. Be it 1 minute, be it 5 minutes, be it 15 minutes, be it 1 hour, be it 4 hour, be it a day or weekly or monthly. All of them go through three phases. So now we look at the monthly because this is what we want to use to analyze the market before the CPI. So now during the kickoff of the month, three things occurs: accumulation, manipulation, and distribution. So now we tend to want to trade the distribution because yes, distribution is one way. It's the best way to trade. Just follow the trend and you keep stacking them pips. But trading during the manipulation, you get your SL gets hit most of the times. So most professional traders, we trade after the manipulation is over, after the manipulation phase is over. So now we also want to, yes, we want to be in the market all the time, but then once you're in the market all the time, it brings about unnecessary decisions and at the same time unnecessary losses. So the best time to trade is during the displacement phase. So now accumulation phase is more of the consolidation phase, and this is the phase that can actually play with your mindset, you understand? Because yes, market gets to be very slow and then you tend to rush trade. So yes, I also talk about the technical analysis, but at the same time there's also the mindset towards trading. So now we want to look at how CPI comes in all this. So now first week we experience accumulation. Market is slow during the first week. If you notice, Monday, Tuesday, Wednesday, Thursday, market is slow. But Friday is when we tend to see more of market movement. That is NFP, the first week. So what does NFP do? What does it do? NFP gears in. It starts off the manipulation phase. So that's why you see that pull, that massive volatility going against the trend. Most times going against the trend. So now what you understand is this: yes, it does that. It kicks off the manipulation phase. Then the coming week, that's the second week, is the CPI week. All the time this happens 80%, 90% of the time. So once the CPI week kicks off, we then expect the major pullback, because yes, it's manipulation, but another word for it is major pullback, or what we call major retracement for those that use Fibonacci, which every trader should be using actually. So now once it pulls back, it's definitely, look at my chart, it definitely pulls back most times towards this premium price levels that are 0.236 or 0.382, or it could buy off for those that are buying in case of a buy trend from a discount level of 0.786 or 0.618. So these are like zones and levels and price levels that market tends to pull back or have a major retracement to, and this major retracement, the climax of it occurs during CPI. So what do we expect during CPI? We expect market to get to its climax, the pullback to get to its climax using the monthly candlestick. Like what is on display right now is a US index, because yes, tomorrow is the CPI. So what we should be expecting is market to definitely buy all the way up, because yes, it's an established bearish trend since February, but definitely market is going to pull all the way back, retrace all the way back towards these areas: 0.21, 236, 382, 0.5. That's the equilibrium mark. So once it gets all this level, then we expect market to continue the sell trend. So this is what I have to tell you guys about CPI. I have to wrap it up here. I believe you might want to have further explanations on this. That is why my Telegram group is made available. At the same time, my email is also available for you guys. So you guys should reach out to me. Let me know on or the best way to make you understand this. I think that should be what I should say. So, like I said, there are more videos that are going to come up. There's like a series that I kicked off as of last week, and I believe that it's going to keep rolling in. So definitely like, subscribe, so that you don't get to miss out, because you really don't want to miss out. So like, subscribe, and see you guys in the next video. Take care. Stay tuned.